This is your dose of daily market wisdom with master trader Nick Santiago. Starting from humble beginnings, Nick has been beating the markets for over 2 decades. He shares with you his take on the profitable trades that will have you moving towards financial freedom in no time at all. To see an in-depth review of his track record and much more, go to inthemoneystocks.com.
Welcome to your daily dose of daily market wisdom with master trader Nick Santiago. Today is June 17th, 2020. This is show number 57. I'm Kerry Lutz, and Nick, so we're seeing a little pullback today, aren't we?
Yeah, well, this is an options expiration week. This Friday is going to be options expiration for the month of June. It's also a quadruple witching options expiration, which means you have 4 different asset classes expiring this week, and it usually makes for a lot of institutional game playing. So, we had a good little rally yesterday, and it was a very volatile rally, but nonetheless, markets finished higher. Today, they're pulling back a little bit, so we'll see what we get today. I rule nothing out during Options X. I always say expect the unexpected, and we'll see what we get here.
Yeah, so do you think it could be government policies that they're influencing to make the market go up, like the Fed is buying up every corporate bond in sight?
Well, I definitely think the Fed stepping in is probably the primary driver for sure. That always has been, but you can make that case since 2009 when we had QE1, QE2, QE3, Operation Twist. Not QE4. Then we had QE4 going on now, which is QE Unlimited. I mean, let's call it what it is. I mean, there's a lot of liquidity being injected into the system.
Yeah, lots of liquidity, and where else is it going to find a home? There's only so many Picassos out there, right?
That's right. And, when you get that liquidity flood, it goes into the market. The negative part is when that gets withdrawn or taken away, then the party's over. And that's when you get these big corrections like you saw in December of 2018. But right now, the party's still on, even though if you get some pullbacks, they still look like it's going to be a buying opportunity.
Uh-huh. And of course, this is maybe after the 08-09 resulting bull market. Probably this could be the second most hated bull market in history.
I would say so. You have as much as we hear about the Robinhood traders and all the speculators that are, new to the environment and coming into the stock market, we still have a lot of people that are looking for, new crash lows and things like that. So I try to not listen to the news, even though you can't really get away from it. But I just look at the charts, and the charts are telling me right now things are still hanging in there pretty well.
Yeah. So what about those new entrants? Are they sheep being led to slaughter?
Oh, for sure. If you don't know what you're doing in this business, you're going to get into it, and you might have a little bit of success and a little bit of luck in the beginning. But, in due time, if you make it through the year, you'll find out it's not that easy of a business.
Yeah. And you'll see the reverse Robinhood effect, right?
Absolutely. It will be the reverse Robinhood. I like that. Yeah. But yeah, that's exactly what you will see. And It never fails. It never fails. I always use that Gallactic Space chart, SPCE, just to show people that in February of this year, they were buyers at 40, 41, 42 bucks. And now the stock's $15. That's the typical story that you'll be hearing.
Yeah. Yeah. So it's amazing, though, because effectively Robinhood is able to charge no fees, no commissions, because they're selling their data to the high-frequency traders, and the high-frequency traders are then front-running them into the market. Do I have that right?
That's pretty correct. I believe that's the way it works. I haven't really looked into Robinhood all in that much in depth, but I do believe that's kind of the way it works because you're not charging a commission, so you have to sell the order flow, and that's generally the way it works.
Right. So effectively, the Robinhooders are getting robbed by Wall Street.
Well, not necessarily. I mean, they've made a pact with the devil, and that sometimes you got to live up to your deal.
Yeah, and understand that that even with a so-called mainstream stockbroker, online broker, they could be doing the very same thing to you, and you don't even know it because you just have to read that book by Lewis, The Flash Boys, and I mean they're doing it to the whole market. So maybe it's better that you just pay no fee and you kind of opt into you're going to get beat by the flash traders and hope for the best.
Yeah, personally, I don't care too much about that for what I do. So if, as a day trader too, I actually still use the ECN. So I actually pay for the use of ARCA, which is an ECN, electronic communication network. So I see where my order flow goes, and I route it through who I want it to go through. When you use one of these trading brokers like Robinhood, you don't have control over where your order gets routed. They just give it to the market maker, and somebody's trying to front run you by, maybe a quarter of a penny or a tenth of a penny. Yeah. And they do that over and over and over and over, and that's how they make their money. But to be honest, my system, what I do, doesn't really get affected by that. So we have a lot of traders using the free platforms, and they don't really care that the high frequency traders are front running them at all.
And it's the funniest thing. They're like doing this like it was household goods. If you refer a friend, you get free stock in some basically worthless companies, I guess, right?
Well, I've never heard – I don't know that program, the Refer a Friend program, but nothing would surprise me out here. I've seen so many things over the years. I would not be surprised if that's sometimes how they would do something.
Yeah. Well, I see it here. You can get up to $500 worth of stock with Robinhood. Hey, maybe they'll give you a stock in Hertz.
Yeah, there you go. Well, it looks like the top 20 list of Robinhood trades. Hertz is, I think, number 3 or number 4.
Yeah. So this is a way, it's kind of like the Google or the Facebook of stock trading because, right, it kind of, what companies get chosen are really determined by their social media networking. Says, buy Hertz, it's a great company and it's only going to go up. And then they all jump on the bandwagon and they buy Hertz. So,
in my opinion, if you buy Hertz, you're really looking to do exactly what the name says. You're going to get hurt.
Yeah, that's HURTS. Hertz. It hurts to lose all that money, and really, the SEC should have stepped in there because, you can't protect people from their own stupidity, but you certainly can protect people from others who are attempting to capitalize upon their stupidity. I thought that's what the SEC was supposed to be doing, but I guess there's no such thing as a reasonable investor anymore.
Yeah, I look at this whole thing, and that's what we call froth in the market, where people will just do outrageous and stupid, ridiculous things. And, here's a company that's filing for bankruptcy, and they're able to raise capital ahead of that bankruptcy proceeding. It's just mind-boggling how it plays out. But, just a week ago, Hertz was at $6 and change. Now it's back to $1.75.
And that's probably too high.
It's incredible.
And that's probably too high because, as we know, in a bankruptcy, the creditors wind up owning the company. The equity holders might get a little sliver, but it's not worth anything near what they generally paid. And that's the way the system works because the creditors get paid first. But somehow, I guess these kids have lived their entire life in insolvency, so they don't really know the difference, right?
I think you're right. And to go back to, the creditors will get paid first, and then it will be the preferred shareholders. Right. It'd be preferred stockholders, not even the common stockholders. They're going to see nothing. So, again, it's a lose-lose for anybody trying to do this. I don't know what the deal is here, if there was any arbitrage that could be done here. I'm sure somebody made money somewhere, but I told my membership, we are not looking at this stock. Don't even bring it to my attention. Many of them were talking about it. Is Hertz a buy right now? I said, what are you, out of your mind? Yeah. And, here we are looking at the stock, under $2 again. Yeah.
So social media and investing, do they really mix? You can get information from social media about every company. There's boards out there, there's chat rooms, all these things. But in the end, does it really help your investing to tap into it?
For me, the answer is no, simply because I won't do anything unless a chart pattern says to do it. So for me, there's no reason to ever be in any stock or any investment unless you have a solid chart pattern. I mean, that's all it comes down to. I make it very, very simple. We trade off the patterns that are presented in front of us that evolve over the days or the time parameter that we're looking at. Well, I'm never getting into a stock just for the sake of saying Elon Musk put out a tweet about Tesla. I could care less what he says. It really, the chart tells me what to do. And so for what I do, it's always going to be about price, pattern, time, and volume. What others do with their time or with their trades, I should say, they may try to catch a momentum wave off of a tweet or some kind of advertisement or some kind of post that's out there. But, that falls into the typical category of pump and dump. And, in my opinion, that's not trading.
Yeah, for sure. And, well, it's so interesting because I listen to these guys, the value guys. They had a podcast for years. They've taken a break, but they're coming back because basically all Wall Street was doing was passive investing management, right? No thought, no nothing. Just put your money into the ETF of your choice, sit back, relax, and watch the profits accrue. And we're not in that market anymore.
No, those days are gone, and they're long gone, and I don't think they're coming back, to be honest, for quite a while. So if you're not a trader and you don't understand what makes stocks move higher and lower, I would just, rather you sit in cash and not do anything, because this is a very volatile environment. This is going to be a volatile environment for the foreseeable future. And when you think about what's going on around the world, just look at the geopolitical events. It's really incredible, when you talk about a coronavirus or you talk about protesting or whatever we got going on, conflict from different countries brewing around the world. This market reacts in a moment's notice. It's very, very fast. And you have to really learn to read these chart patterns. If you don't read them and you don't understand them, I don't think anybody could do this.
Yeah. Yeah, I can see that. Yeah, what's going on. It's pretty shocking now. We're supposedly getting the second wave. You think the second wave has anything to do with options expiration, Nick?
I think it has everything to do with options expiration. Absolutely. That's the first thing I said, last week was, it looks like options X is already starting, last Thursday. I think it has everything to do with options expiration. It's just remarkable how this stuff plays out. You also look at the charts, and you could see that we were due for a good pullback, and you got a really big scare last Thursday. And, you have to respect that. If it turns into something more, I'd be the first to let you know. But right now, I think we're still in that range-bound trading action, and, we'll see what kind of pattern, I should say, develops by the end of the week.
Hey, so one of the things you look at is the spiders, how they're trading, the volume on the market. That's what tipped you off in January and February of this year that something major was coming, a major downturn. Is there any message that they're flashing right now?
Well, we did have a high volume sell-off last Thursday, which was June 11th. I mean, we traded 209 million shares, so you definitely want to be aware of that. But the one thing I will say that's a little bit different at the moment is that we're still holding trend. And, we never really broke trend. And as long as you hold trend, yeah, you could get those, one-time sell-off days, or you could get something like that. But the market right now, you have to be careful. This is not, especially after the run we had. Kerry, this was, an incredible sell-off from February to March, and then an incredible rally from March to June. I mean, it's remarkable. So, at this stage of the game, either way, you want to be a little bit on guard. You don't want to overload yourself. And, when I see froth in the market from these Robinhood traders, or I see, these little micro cap biotechs doubling that don't trade any volume, next thing they're trading 40 million shares and they're up 30 points. Yeah, that catches my eye, and that makes me a little bit hesitant, because I know that froth got to get kicked out of the market, and then we can proceed, higher again. But, you go through these periods, and they repeat themselves over and over. You just got to be able to spot them. But right now, we're in an options expiration. Friday, it's like I said, it's quadruple witching. So we'll see what kind of pattern we get into the end of the week.
Yeah, it's just fascinating to watch the whole thing unfold, Nick. I mean, it's just there's nothing new. The Robinhood thing is just another variation on the theme of how Wall Street separates investors from their funds, basically. We see it over and over. There'll be something else. Who the heck knows what? Probably something to do with blockchain and buying stocks using blockchain technology. But there will be a new one because Wall Street has to keep concocting these new schemes in order to feed itself, right?
Absolutely. And that's been going on from the beginning of time. And now, we're hearing of these new programs where, say you want to buy Apple, you could buy a sliver of Apple.
Right.
You don't have to just buy, the whole entire share. You can buy a piece of the share. So, that goes back to the derivatives market, right? What is a derivative? If you have, Joe Namath's football jersey and you take a piece of it and you cut it off, that's a derivative. If you cut that off a little bit, that's a derivative. And if you take a snapshot picture of it, that's a synthetic derivative. And we're getting back to that. You see it, that's what will happen. That always repeats itself.
Yeah. So about those fractional shares, it used to be companies when their stock price got like over $100, they'd split and you could play that split. It was a good market opportunity at times. Now they don't split anymore, so the market is effectively splitting their shares for them?
Well, in a sense it is. A lot of times what happens now why companies don't want to split is because when you split up your share sales, let's go with Apple. In 2012, Apple was at $700. They did a 7 for 1. Now they're went down to $100. Now the stock is at $300. That was a good time to get in on Apple because it sold off and then it has rallied back up. But what happens? A lot of companies don't want to do splits now because they don't want to see that small speculator getting into their shares. They'd rather have just the institutional traders own their shares, and there'll be a lot less game playing overall. Because once a small guy gets in, somebody's going to take advantage of them.
Yeah. So small investors equal big opportunity for the sharks, huh?
Always. That's the way it works. I always tell my traders, we're not a shark. What we are is the remora. We're that fish that swims next to the shark and we eat the crumbs. We're always watching what the shark does. And that's why we've been successful. All
right. Well, I think we'll leave it at that. We'll talk more about sectors and such tomorrow. Make sure you send us your questions. We answered a couple the other day. KL@KerryLutz.com. KL@KerryLutz.com. Go over to inthemoneystocks.com and look at Nick's trading record as well as a lot of other valuable info you'll find there. The Twitter feeds at ITMS, at Nick Santiago 01, at Kerry Lutz. And Nick will pick up tomorrow.
Sounds good, Kerry. Thank you again.
This concludes another episode of Daily Market Wisdom with Master Trader Nick Santiago. For more information, go to inthemoneystocks.com and see Nick's full trading record, or check out the Twitter feeds at ITMS and at Nick Santiago 01.